You've been serially successful with many high-profile, massive wins, such as Kirkland Lake Gold. What drives you to keep going? Is it the thrill of the deal? Is it the thrill of the win?
Well, it's fun to go on a search. I describe my investment policy as stealing value. So you're always looking, and you know that the market is so massively imperfect that if you can find something, particularly in precious metals these days, they're so inexpensive. I mean, I pretty well every company I would look at, if I was to look at it, their net asset value versus their stock price, and these are smaller companies, they're probably all 10 to 1. You know, it could be a 10-bagger. If it ever makes its NAV, which is a conservative calculation, it could go up by 10 times. Well, what if the deposit gets bigger? What if the price goes up? The price of the product goes up? You know, it could be an easy 20-bagger. So that's a nice opportunity to create value for the family office.
Now, Eric, you're also known to have a penchant for silver, and you've been the biggest investor in the silver space in recent years. The silver market is in a sort of technical deficit. More is consumed than is produced from mining. What do you think is going to happen when industrial demand for silver, such as for solar, which grew about 27% last year, depletes the inventories historically used for investment and store of value?
Right. I think silver is going to skyrocket. In my speech, I suggested that Michael Oliver, who writes the Momentum Structural Analysis, I think his ultimate target's 250 on silver.
250?
250, yeah. And I believe it. And there was another gentleman, Don Durrett, who analyzes small cap mining companies, and his target was 500. And I can see both being entirely possible here, because I know the targets on gold were like 8 to 10,000. Silver used to trade at 15 to 1 to gold. It's produced, you interviewed Keith Neumeyer, he said we only produce 7 ounces of silver for every ounce of gold. Why is the price 90 to 1? Because it's been manipulated for the last 50 years. And those guys are all still short. They can't get off their shorts. The demand for silver in the March contract that just expired, which is open for delivery, not expired, but open for delivery, they nominate for 76 million ounces of silver for the March contract. We don't even produce 76 million ounces a month. But on COMEX, that never used to be a physical exchange, they're delivering a month's supply of silver.
You've invested in dozens, if not hundreds, of juniors. How do you make your investment decisions, given the plethora of companies that are vying for your attention and a check from Eric Sprott? And are there too many companies out there?
Quickly. No, I say that because I don't do them all quickly. But I'm a great believer if I see a company that's announced some drill result and I go to their website and look at their presentation, I can reasonably quickly assess how opportune the opportunity is vis-a-vis all the other ones, okay? And I'm looking all the time, every day. I look at 2 or 3 companies, probably more than that. Of course, I know a lot of them already. The fact that they're in silver and gold, of course, that's the first check mark. One of the other check marks I love, by the way, is that nobody follows them. No brokers follow them. That's a perfect one. And because I'm just assessing what the ore body's telling me, okay? And I know the price of the product. Now, how good's the ore body? So I don't think it takes a lot of time to realize how undervalued it could be. And I'm a patient investor. So, as I say, when I look at a NAV, I can find lots of stocks trading at 1/10 of NAV. And the NAV calculation is typically a very conservative calculation. You know, they take the price and like a lot of guys use 2,000 as the price for gold. Well, it's 2,900. That means the NAV is twice what you're telling me it is, just based on price. So it's not too hard to find things that are of interest.
Okay, you have a lot of 9.9% stakes in companies. What process do you go through to increase that to sort of over 20%? You have over 20% in some companies, such as you recently did with Aftermath Silver. Is there an additional step that you go through?
Not really. I don't lock myself at 9.9 for sure, okay? 19.9 is another question, because when you go through 20, you're only allowed so many transactions in a year. I think it's 5 transactions in a year. So you better make them significant. You don't want to be going out and buying 5 by 100 shares unless you're 5 transactions. You're maybe hoping that some strategic guy's going to sell if you want to go higher, and or the company wants to do an issue. And I have lots of companies. I'm through 20, and lots of companies through 10. I don't have a plan to sell them. Typically when I buy, I don't have a plan to sell them. I have a plan to let them appreciate and grow and have someone buy them from me. Somebody come in and buy them from me, some takeover.
So, okay, for some of your bigger positions, okay, I understand that, but what would be you're in dozens of companies, so what's your exit strategy generally for?
It's the same one. Like if I'm only buying a company because I think it's dirt cheap, okay, and I know I could buy more. Let's say I put $2 million in. I know I could put a hell of a lot more than $2 million in, okay? And if $2 million took me to 9.9, fine, maybe I go to 19.9, then I gotta, it's not my choice to go above because I gotta have an opportunity to go above. So I know I'm gonna hold them for a long time because every time I buy them, I think they're just dirt cheap. That I could have a 10 or 20 bagger here. So I'm in no rush. I have half the things I own, I don't even know I own them. And then a news release comes up. Do we own that one? Yeah. Like if it's got silver in front of it, I normally own it. Okay. Anything to do with silver. You imagine silver goes to some of those targets I mentioned. You can own any one of them.
Yeah.
And you're going to do well.
Okay.
Yeah.
Now, in 2018, 2019, you reinvested a large amount of your gains from Kirkland Lake back into dozens of precious metals explorers. And some have said that given where the market was at that time, you sort of single-handedly saved the junior exploration space. Was that a conscious strategy, or was that perhaps more akin to Warren Buffett's maxim of being greedy when everybody else is fearful?
Well, I don't know how fearful they were. All I know is I had a hell of a run in Kirkland Lake. I took a lot out of it. I wanted to redeploy it in the area that I have most interest in. I typically don't buy big stocks. So the field I'm in is like less 100 million or less is typically what I would do. So, if you had 100 million to invest and you got to buy little guys, you need to buy a lot of little guys to get your money back in. So in the case of silver, and there are very few silver stocks, there's very few. So I might have been a little bit freewheeling when it came to buying silver stocks. Just because I just have this great view of silver. Hopefully I get to look back and say, well, that was easy.
Larry, let's end with a forward-looking statement, if I may. Where do you think the precious metal space will be by the end of this year?
Well, I'm sure gold will be well north of 3,000, and I would hope that silver will be north of $50, and I would think the stocks could easily put on another 25 to 50% this year. It's my hope.
It's looking like a good year. Eric Sprott, thank you very much for joining us today.
My pleasure, Paul.